Hello traders and welcome to this week's market report. I'm AJ Monte and this is a 1-year daily candle chart of the CBOE Volatility Index, ticker symbol VIX. I'm starting off with the VIX because this is really going to set the pace for next week. And as I do each and every week, I leave my lines on the chart so you can see how accurate the forecasts were and how accurate technical analysis is for a tool, not just for forecasting, but for risk management. And last week, I said that we would most likely move down on the VIX and test this 20-period moving average. And then from there, I projected that we would bounce. And again, this line right here, with the end of the line being my target, is 29.14. If you look right here, the high for the VIX was right around 28.92, so we were only off by 22 cents on that one, and I'm going to take that as a win, and here's why. Next week, I think the VIX could go a little bit lower. Now, let me erase these lines and show you why I think we could go a little bit lower, not a lot, a little bit, and then I think we're going to see a repeat performance of what we saw this week. I think that the CCI down here, hinging lower, is really the first clue to giving us that possibility of a downward turn early in the week. And we almost have a conflict with the stochastics. You see, the stochastics is more or less running flat, but the CCI, being a little bit more sensitive, is giving us that possible downward pullback there. So that's what I think we'll see with the VIX. Now, because the VIX is a contrarian indicator to the S&P, what does that mean? Well, whatever I said in the VIX is mainly going to be the opposite for the S&P. And as I zoom in to this chart here, you will see that last week's forecast, I said we would go up on the S&P, test the 20-period moving average, and come back down. Look at that high right there, exactly at the 20-period moving average. Look at the target right there at 322.39, and look at where we closed right there at my target. So we are hitting the cover off the ball with these charts, and I hope you're enjoying this, because if you learn how to read these charts with great accuracy, this isn't rocket science. It's going to take some time to learn this. But if you do learn it, and then all of a sudden we have 10,000 more people, 20,000 more people, maybe 100,000 more people following the charts will give us the buy and sell signals. And as a result, we will all be reacting simultaneously, which brings us all to a whole new level of trading. And that's how we're doing this. So what does this mean for next week? Well, I think the S&P could actually go a little bit lower before going up. And then it's going to be crazy because I usually don't do this. I think it's going to go a little bit lower because of the oscillators still going lower. And we see this red candle on higher volume. So I think we'll go a little bit lower on Monday. Tuesday, Wednesday, I think we'll go up. And then again, I think we're going to see a repeat performance just like that of a pullback, which would most likely leave us at a point right there at 330.12. See how this moving average is rolling over? It's starting to curve down, and that moving average acts as resistance. So we're going to have a lot of traders, especially option traders, are going to be selling into the rallies. That's what happens when the moving averages start rolling over. We have short-term traders are more or less buying or participating in the upside, but they're very quick to sell at those moving averages. So that's my forecast for next week. If I look at the IWM, which is the Russell 2000, didn't follow as precisely as what we saw in the other markets, but we did go up Monday and Tuesday and Wednesday. Look at that. Let me zoom in just a little bit more for you. You see, here we go. Monday, Tuesday, Wednesday, we had this inverted hammer. It's pretty close to my timeline there. And now, look at that. We have that moving average acting as resistance. I think that the Russell 2000 is going to go lower. Let me just clear this line. Again, not all markets move exactly the same. I think the Russell 2000 is going to drift lower. And right there, my target is going to be 149.5. For those of you that are noting that, keep an eye on whether or not we hit that target next week. Now, I'm saving the best for last here because look at the Qs, QQQ. I had my lines on the chart here, and look at that. Last week I said Monday and Tuesday we go up. Look at that. We went up, tested the moving average, failed, came back down with a bearish engulfing pattern. We continued lower on that candle right here, and today, notice the end of my line. Let me zoom in there for you. That's 262.63. What's the low for today? Check that out. 262.63. I was talking to one of my coaching clients, and we were both amazed at how perfectly that hit to the penny. And that's the power of technical analysis. If you like what you're seeing here in these weekly reports, then please subscribe. Go click on that subscribe button, and you could even get an alert sent to you when these alerts come out. And then tell your friends about it. Really, if you know anyone who is learning technical analysis, or if you know anyone who's investing, who wants to learn about risk management, this is a great freebie for you. You're getting your education on how to read the charts, and you're seeing the evidence right here with your own eyes. So have a great weekend, and we'll talk to you next week. So long.